Shares down about 20%. The search company suffering from the weak ad market, but state-backed investment in AI as part of China's latest 5-year plan. Well, Jeff, that could be a bright spot. What do you do with the stock here?
I think that is the bright spot, Kelly. And I think you want to be a buyer here. Yes, despite the fact that it looks like it's in a free fall, like no bungee cord attached in the last month. I think what you have to understand is that it's not just a China pure play. It's not just because of COVID zero policies. And of course, the COVID zero policies had wild ramifications, implications as the system, the economy over in China just has not rebooted the way it has in the U.S. But I think it's the AI play you talked about. I think that really presents an opportunity for Baidu. It is the second world's largest search engine. So I think at the end of the day, I know the all-time high on this is up at $354. So we're dramatically off that. But I think technically it really lines up. If we can get this stock back above $130, it's going to get some footing. It's going to get some support. And if we actually get some form of optimism out of China, which we've had none, absolutely zero, you couple that with the AI enthusiasm we had in the Magnificent Seven all year, Baidu does look attractive down here, but I think you have to really manage this risk because this is volatile, high beta stock. All
right, you looking for 130? It's at 124, so we'll see if it gets that bounce today. And we'll move on to Lowe's meantime as we turn our attention to a couple of retailers here. Lowe's shares are on pace for their worst month in about a year, down about 7%. They lowered full-year earnings and sales guidance back in May. They're expecting comps to fall between 2% and 4% from last year. But with record high home equity, good gauge for consumer spending, people feel richer, and the housing shortage, will the renovation boom continue? Jeff, what do you think? The shares are up about 9% so far this year.
Well, I think Lowe's is interesting. I actually want to be a seller here, and I'm not going to beat up Lowe's by any means because it has outperformed Home Depot. I own Home Depot. If you look longer term, Home Depot, which is 3 times the market cap, I want to own that. But Lowe's is fascinating because you're right, Kelly. From a year previous, quarter revenue, they're looking for nearly $25 billion. That's down about 10% from the previous year. So there has been a stronger than expected pullback in home renovation. I think interest rates are trapping a lot of people in their homes. But I think if you look at a mean reversion, we talk a lot about trading in pairs trade. So if you own Home Depot and you've been a laggard and you own Lowe's, I think this is where you sell it. And I think really interesting, the 200-day moving average, which is just at $209. If earnings disappoints and if you own Lowe's, I think that's where you take profits. That's where you switch over to Home Depot. And this is more of a trade. It's not beating up Lowe's. The stock is at a decent run, but at the end of the day, it's just too high beta, too small of a stock, as we're seeing a lot of confusion about the real estate market currently.
All right, so you're sort of watching that 209 level, that 200-day. You're a seller, $8 below where we are right now, so that's a good round number to keep an eye on. And finally, yes. Macys, I mean, former behemoth, this market cap has just dwindled. It's seen 3 double-digit monthly slides this year. It's on pace for a 4th, and the strength of the consumer is one question. Buyers are also taking on more debt in the face of higher prices. And interestingly, some Macys vendors are already reporting some price squeamishness. I'm surprised. Are you a buyer here, Jeff?
I am a trader and I am a buyer here. Now, yes, you're absolutely right. This is almost a micro cap. Just kidding. It's still a $4 billion company, but a long way away from being the department store it was. I actually want to own Nordstrom. And if you already own Macy's, that's fine. I think Nordstrom gives you a little more diversification. But you're right. If you look at a chart, Kelly, under $13, look out below. So I think you can be a buyer here. But whenever we buy a stock this high of volatility, I think you have to understand you need to buy it with a stop. So as soon as you buy it here, if you're going to buy it here, you have to put that stop in because under $13, it could be a free fall. And that's where you have to understand this is not a long-term investment. This is a trade. And this could be some profit really short-term if you own Macy's going in earnings.
All right, so that leaves about $2 of cushion to the downside before you tell people to pull the ripcord. I just got to quickly ask you about Zoom because I continue to find it relentlessly fascinating, especially, they're pulling people back to the office now at Zoom's corporate headquarters. The stock is just about unch year to date.
It is, and it's only down 77% from the peak of COVID. So it has had just a hellacious move lower. And this was really the darling during COVID when everyone was not only working on Zoom, we were having cocktails on Zoom.
Sure.
So I think Zoom right here is just fascinating because at $20 billion, it's kind of a takeover target. But with the one thing that gives a little bit of optimism why I'd look to trade and buy this stock, yes, Kelly, another odd buy by myself. But I think you have to understand that the AI, they're racing to make new artificial intelligence tools to enhance their platform. That could be attractive to someone like Sir Elon Musk, who wants to incorporate more and more into his super app X. So I think Zoom is attractive here, despite the fact it's been decimated.
All right, I believe they report tonight. If I'm hearing you right, you're saying they're still a $20 billion market cap. That's shocking to me.
Hard to believe.
Impressive. All right, we'll see if they can take it for a trade. Jeff, thanks so much for your time today. We appreciate it.